introduction, if we look at a bank like EcoBank, we're in 35 out of the 54 countries. We have probably 40 different regulators and different regulatory regimes. That brings a lot of complexity, which also requires explaining to customers. Customers want to do business, they want to move money, they want to trade. So what do we look for? We want to support our customers to do business. We've talked about Africa continental free trade. Now, if people are going to trade, businesses are going to trade, they need to be able to make payments. And the challenge in a lot of places is often access to capital and access to be able to move your capital. And I think we've faced a very difficult last few years with COVID, Russia, Ukraine, shortage of dollars. So what we see is more open regimes, able to provide currency when people need to buy and sell goods is essential. We'd like to see more harmonization of payment rules, like you say. We also need to really focus on still keeping an eye on how we can use technology to be able to bring down the cost of payments, whether it is payments that are being done by individuals across, as you say, the cost that customers pay in Africa is in many cases even into the teens, not just the 8% Her Excellency talked about. So when funds come into the continent, we're losing a lot of value on that side. And we also need to remember trade is also not done by just big companies. It's done by smaller individuals, right? So you could be a tailor in Lagos selling goods into Lome, right? And we want to be able to make those payments in a frictionless kind of manner. So I think if we can look at the frameworks, the regulations, whilst being mindful that ministries of finance and central bankers still have to manage things like their foreign exchange reserves, that will help. I think we're also trying to work on frameworks that allow payment in local currency. But if payments are going to work in local currency to avoid the pressure on the dollar, we need to see more trade so those currencies can move around. Otherwise, we will end up with currencies getting stuck in some locations because of the dislocation in trade. I think the last point that I would mention is really around working within a global regulatory framework that inspires confidence and trust. Because if people don't trust that their money is safe, can move easily, will not get trapped, and will be subject to the rules, the global financial rules, we will struggle. We're seeing, if you look at correspondent banking, the number of correspondent banks in Africa is reducing over time. And it's because they perceive the risk, reward, return not valid for them in this particular instance. So that doesn't encourage foreign investors to come and investors across Africa. So we need to invest in those. We need to give confidence that we are actually following the global regulations that encourage investors to come in. And then I would say, last but not least, investors want to bring their money, whether it's from one country to the other, but they also want to be able to take out their money when they need to take it out, whether it is to make investments in other countries, whether it's to pay their trade receivables. If there is that feeling that you cannot take that money out or you cannot make your payments, then we end up with dysfunctional things like hoarding, which now drives up price of currency, shortage of currency, which then makes it more difficult to make those payments. We've talked about trust, confidence, data is the third angle that I would add. And we have to tell our story better. The problem is we went with our bond recently, where we raised 400 million. And I want to just call out our partners for supporting us. You know yourselves in this room because the anchors supported us on this side.
And the Frexim Bank, I believe, was a lead arranger.
Yeah, so we had AFC, we had Propaco, we had TDB. And when they come and they say, we're putting our money down, it gives confidence to others to say, okay, so they're putting significant sums of money. But what do I talk about when I say telling our story? If we don't share success examples where we show that we can get good risk-return trade-offs, Africa becomes one block as opposed to 54 different countries with multiple different segments performing very well. People have this perception. You deal Africa, you're going to face high delinquencies, high impairment, and you've got to price for that risk. So it was very interesting as a Pan-African bank. when I asked them, how are you pricing my risk? And there was kind of this weird look, right? You know, so it's supply and demand in this situation. I say, we are represented across 35 markets. We don't have a home market. So is it South African risk? Is it Nigerian risk? Is it East African risk? Or is it Pan-African risk? So then it becomes an interesting conversation. And this is the problem. Now, then if you have a situation happening, like a default happening somewhere, that now becomes blurred into Africa. Wasn't there a default? We must price for that default. We then have another problem is that scale. We've talked about scale. 400 million is small for them. They're almost thinking, why should I bother? In all honesty, when you go to a fund and they say, I'm putting in $50, $20, this is a small investment. They're saying, why can't you be raising $1 billion for your firm? But when we tell our story, they become very excited about the opportunity. And this is our duty of care, that we must tell our story better. We must be realistic. And exactly as Sergio said, we must live up to our commitments and pay well and just build that trust back. And the last point that I would say is, and this might sound very strange, is we go to raise money and we go out to the West. I say, why aren't we raising this money in Africa? We have hundreds of billions of dollars of funds in Africa that are not invested in African financial institutions who can multiply out this fact. Now that requires us to reflect on the laws around pension funds, investment funds, sovereign funds, to boost the support we get from the likes of World Bank, IFC, AFC, among others. I urge us to invest in those DFIs, in those institutions, because they can then invest in us, and there's a multiplier effect which will help drive the economies in which we're in. We don't always have to look outside to get money. We understand our story better than anyone else. If we cannot invest in ourselves, who is going to invest in us? So I urge us to just think about this, because the opportunities are abound, as you've said. And if we don't invest at home, I'm not sure where we're going to go in the long run.